Well, the housing market in the GTA appears to be regaining some momentum as continuing lower prices and rate cuts recalibrated in the month of September. So let's break down the latest numbers and details with Jason Mercer, the Chief Market Analyst at the Toronto Regional Real Estate Board. Jason, always appreciate you coming in and helping us understand these numbers a little bit better. September of this year looked a little bit better than the September of last year. What do you attribute that to?
Yeah, I think a couple things. I mean, number one, obviously we've seen rate cuts on the part of the Bank of Canada, and that's had a positive impact both on variable rate and fixed rate mortgages over the last number of months. So I think you got a lot of people that were sort of sitting on the sidelines waiting to see, number one, when rate cuts were going to start. We've seen that, and then, how far we were going to go. And I think there's some people that affordability equation is starting to work out for them. And on top of that, when they do enter the market, they're finding that there's a lot of supply out there. So there's room for negotiation on the price front as well.
There was a sense, Jason, that perhaps because the Bank of Canada has indicated that rates are going to go down, that people might just, though, continue to stay on the sidelines because they say, hey, maybe there's another 50 or 100 basis points or more that could sort of drop out here. What is your sense of looking at the numbers? Because you sound to me like you're saying, people think now might be the time to get back in.
Yeah, I think there is some of that, though. I mean, when we do polling, we find that there's a whole range of answers when we ask, how much do rates need to fall before you move back into the market? And, some people say 100 basis points, some people say 300. So I think, we're going to see this sort of cascade over the next, say, 6 to 8 months as we move towards the spring of 2025, where more and more people, that affordability equation is going to work for them.
Yeah, interesting, too, about the numbers in terms of average pricing as well, because it's really the average sort of single detached home price has kind of been hovering in that 1.1 million mark. Seems to me for about the last year or 18 months or so.
Yeah, it's interesting because, we have seen a lot more supply in the market. So certainly buyers that have been active have been able to negotiate pretty good deals on a home. But I think at the same time, you see, homeowners that, have been budging as much as some people would have thought on pricing, because they're looking down the road. They know that interest rates are going to be lower. They know there's going to be more buyers out there. So if they don't have to sell right now, that's provided a bit of a floor on pricing.
Yeah. Is this kind of a Goldilocks kind of market we're entering, where price and rates are kind of in a range where I wouldn't say everyone's happy, but people are feeling comfortable and confident, maybe?
Yeah, it's an interesting point. I think initially, as we continue to see rates drop off, people will benefit from more supply, and so that'll keep a lid on price growth. But with the record level of population growth we've seen, we're eventually going to absorb all of this inventory. And so, that's the risk. Say, when we're talking a year from now, market conditions are going to be tighter, and if we don't have, that new supply completions coming into coming down the pipeline into the marketplace, we're going to see market conditions tighten up again.
And realistically, it doesn't seem like we are going to be having that, because starts are so far down, especially in Ontario right now. And so what is there to be completed? There doesn't seem to be much supply coming in.
Yeah, it's a bit of a vicious circle. I mean, obviously, as the resale market tapered off as a result of higher borrowing costs, so too did visits to new construction sales centers. And to a great degree, you saw builders holding off on opening sales centers as a result. And that's where the pipeline starts, right?
Exactly. Now, the other thing interesting, we heard a lot from builders, from Build, I guess it was about a week and a half ago or so, when they talked about, basically what they have to be paying to municipalities in terms of development charges and all these sorts of things here. Do you poll on that, asking people what their thoughts are in terms of what the development charges are and sort of what this impact is having on builders and construction?
Well, I think people certainly understand that there is a pass-through of those added costs that builders bear, that some or all of that passes on to the end consumer, the buyer, whether that's an end user or an investor that may be bringing a unit online to serve the rental market. And so certainly if you look at those costs, that's going to factor into someone's decision-making process whether they choose to buy or not.
Yeah, I mean, when a house is $250,000 before you put a shovel in the ground, that has an impact indeed. Jason, always appreciate talking about this with you. Jason Mercer, the Chief Market Analyst from Toronto Regional Real Estate Board. We'll chat again next month, I'm sure. Okay.